I don't believe the housing market will crash in 2024, but I don't have a crystal ball, so I don't know for sure. With interest rates at a historic high and an unstable economy in an unpredictable housing market, a housing market crash isn't out of the question. So what do you do if the housing market crashes? Let's talk about that today. But first, let's define exactly what a housing market crash is. It's a sharp decline in real estate values that typically follows a period of inflated housing prices. Housing crashes are generally caused by a slowing economy, tighter credit standards, and rising interest rates, all of which can contribute to a decline in demand. By using that definition, we already have a lot of those indicators of a housing crash, except for a decline in demand, at least in most housing markets that I'm aware of. So what do you do if there's a housing market crash? If you're thinking of buying a home and you see that a housing market crash is coming, or you're already in one, the strategy is to buy at the bottom of the market. What you have to realize though is it could take years to see that bottom. What I would recommend is checking out the pricing trends on your local Realtor Association website or other resources like the Federal Reserve Economic Data website. I'll put a link in the description. By viewing the price trends, you can see if they're continuing to decline or if they're starting to bottom out or if they're starting to go up again. Trying to figure out if a housing market has reached its bottom or not is not an exact science, because you'll notice that sometimes there are ebbs and flows in housing prices, but what we're looking for is sharp increases or decreases. So basically, when you can see that the housing market has started to stabilize, maybe it's starting to go up a little bit and it's been that way for a couple of months or maybe a little bit longer, then you can start to feel confident that housing prices aren't going to decrease anymore. But again, this is not an exact science, so you never know what might happen, especially if the economy is in disarray. What happens if you own a home during a housing market crash? Well, you could lose money if you try to sell it, because basically you might have paid more for the home than what it's now currently worth on the market. It could also take a long time to sell if banks aren't giving out loans, and there aren't a lot of buyers out there, like what happened after the 2008 housing market crash. Now, let's say you're a first-time home buyer, you haven't bought a home yet, and there's a housing market crash. What should you do? You want to have a savings plan, which I know can be really difficult, especially if there's an economic downturn or a recession. But by having a savings plan when you're able to buy a home, that's going to put you in a better position to be able to afford the home and potentially getting a smaller loan because you can put a bigger down payment down, things like that. Another thing you can do is improve your credit score. You want to try to get the lowest interest rate possible. So one of the things that you can control is your credit score. By having a higher credit score, that can lower the amount of interest rate that you have to pay. You also want to reduce your debt. If you have credit card debt or maybe a car loan, student loans, things like that, if you're able to pay down those debts, that again is going to put you in a better position to afford a home and also make your approval odds better when you buy a home. Navigating a housing market crash isn't easy, but by paying attention to pricing trends, the economy, and strategic financial planning, you can buy with confidence. Check out this video about why you shouldn't buy a home, or this video to learn how to buy a home with no money down. Thanks for watching to the end, especially if you're a subscriber.